Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Nasdaq hits fresh record high. Our portfolio, Mini S&P surges. Tip of the week, should I buy the best stocks? And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Hi guys, another bullish week for the stock indices. We see the Nasdaq on new all-time highs as well as the Mini S&P 500, although the impression is that in the last period this rise has lost a little strength. To report the performance of the metal sector, strongly negative, and as you can see it is a weakness that exists both in the short and in the long term. Metals have been struggling to rise for some time. We also see the energy sector negative, in particular crude oil, which loses more than 6%. The only exception is natural gas, which is abundantly positive. Meats are negative, soft commodities and cereals are generally positive. Currencies instead are negative, while Bitcoin is slightly positive with a 2% return. However, we know that this is a very small movement for this kind of underlying, which, as we can see, is in the upper part of the trading range in which it has been in recent months. Moving on to the implied volatility on equity indices, I would like to point out something unusual because we are witnessing an increase in volatility, although not very marked, during the last month. Volatility is growing, although the stock market is doing well, as we are now at all-time highs. At the beginning of July we were at these levels, then the market rose, but the implied volatility, instead of going down as it tends to do, has risen slightly, as we can see also from the VIX chart. This is not in itself a wake-up call, but is certainly something unusual. We'll see in the coming weeks if there will be any developments on the stock markets. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions. Good performance on the Mini S&P this week, on several systems. I want to show you only 3 of them. Let's start with the big range, which is a system developed at the end of 2017. It's a system that has been out of sample for the past 4 years and is one of the rare cases in which we can see performance out of sample better than in sample. It is a system that I have personally developed and of which I'm particularly proud, also because it is extremely simple, consisting of only 8 lines of code. It's a system that works on daily bars. Obviously it uses mean reverting logics, and as usual, the long equity curve is the most profitable one. You know, it's very difficult to be profitable on the Mini S&P on the short side. And finally closes all the trades at the end of the session. This week gave us a good trade, let's see, $1,600 after 2 stop losses in the previous days, but in any case we see that we are closer to an equity peak. Now let's move on to other systems designed by Andrea Nebbiolo and Alessandro Danos. They are systems that take position on the lows and the highs of the previous day, so also in this case we use reversal logics. In fact, you can see that there is a very similar trade, and obviously these inputs, these setups are filtered by Andrea Unger's patterns. The first system is certainly more active than the second. It develops almost 200 trades in the same historical period. You can see from the equity curve that it is a system that trades a lot, but despite this, it has a very high average trade deriving from the long trades, while the shorts were not able to make profit. On the contrary, the second system, which is more filtered, is also profitable on the short side, which is not easy on the Mini S&P, and it has a very profitable long equity line. For the first system, we see 2 closed trades this week and a short one still open, which produced a positive result of $3,200, while the second system has made a single trade of $1,700. Okay guys, that's it. We'll meet again in 2 weeks after the summer break.
Hello guys and welcome from Andrea Unger. Today we will continue analyzing the American stock markets, and we will use again our software that has been developed internally. So today we will continue our analysis on the Nasdaq stocks, and in particular we will use again the rebalance of the portfolio with a monthly periodicity. So we will rebalance our portfolio every month at the end of the month, and we will try to buy the top performance stocks of the latest periods. So we will start from the Nasdaq basket, considering to buy the top 10 performer, and the performances of these stocks are calculated on the last month. So this is the equity curve. I sincerely think I wouldn't trade this strategy just because the drawdown is quite high and the returns are lower if compared to the benchmark. So we will go to the next analysis, and I read the same here, but in this case I'm considering 3 months to calculate the top performance to do then the ranking and to choose the stocks. And here I like of this equity that the time to recovery of the strategy seems to be much more better if compared to the benchmark, but the drawdown also in this case is quite high, even if the returns are really interesting. Consider guys, just by the way, that here we are not working with the leverage, so the performance we would have obtained don't have any kind of leverage effect. And here I have considered 6 months as time horizon to calculate which are the top performance for this test, and the returns are also in this case extremely good, but the drawdown also in this case is quite high. And the time to recovery in this case is not that nice because it's closer to the one of the buy and hold. So I wouldn't trade this strategy as it is right now. And now let's go to another test. Here I've tried to calculate which are the top 5 performers in this case. And we are starting with 1 month as time horizon to analyze the best shares. And also in this case here we have a high drawdown, and it's similar to the one of the buy and hold of the benchmark return, sorry. And here the compounded annual growth rate, so the CAGR, is lower than the benchmark, so I don't like this kind of scenario at all. And we will do the same test considering the top 5 on 3 months as a time horizon. And in this case the returns seems to be extremely interesting, because here we are talking about 28% per year compounded, so it's extremely interesting. And the time to recovery here seems very nice too, because it's much more better if compared to the one of the benchmark. And here if we have a look to the yearly gains table, we can see that the only years where we would have lost money are the years where the market, so the Nasdaq, had very bad periods, so like the 2000 to 2001, 2002, and 2008. So it's extremely interesting, this kind of approach, in my opinion. And here we have the same test, but on 6 months as a time horizon to calculate the best and top performers. I like this kind of scenarios too, but I don't like the final part where most of the profits are concentrated here, and also in this case the drawdown is absolutely high and quite unsustainable, in my opinion. The last test I did, I just took the top 10 performers on a 6 month as time horizon, and then I've just added a filter calculated on another instrument. And in particular here you can use any kind of filter, for example moving averages and so on. And in this case I've used a moving average calculated on another product as filter, so I will work only when the price of that product is higher than that moving average. And in this case here we can see that the drawdown has been cut significantly, in a significant way, so from minus 80 and something percent down to minus 65. Okay, that is sorry, 56. That is a lot high, but it's lower than the previous one, and the time to recovery as well is absolutely nicer. And here we would have suffered a little bit, but during the period of the dot-com bubble, where all the stocks from the Nasdaq suffered, and anyway we would have recovered in very few years if compared to the Nasdaq index recovery. So I would suggest you to go more in the details with this kind of approaches, and of course consider not to trade only this strategy, because the drawdown in any case with 1 as leverage is quite high anyway. So you should put only a small part of your capital on this kind of approach if you want to trade it, and you should diversify also on other markets where multiple strategies may help you to diversify the risk.
Few rollovers next week. In particular, we have crude oil, which expires on August 20th and which, as usual, must be rolled a few days in advance, therefore towards the end of the week. Then all the other energy futures will follow. I hope you enjoyed this video. And if you want to learn more about the trading method we at Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.